To all my returning guests, welcome back. To all my new viewers, welcome in. This video is going to be covering criticisms from other financial content creators around secured credit cards. We are going to discuss their take on secured credit cards and where they may be wrong in their takes. And the point of this is in order to keep the confusion down for those of you who are new to credit or repairing your credit and look into options like secured credit cards to put yourself in a better position with your credit and overall finances. And I'm going to give you the perspective on how to get around, above or beyond the criticisms given by these other content creators, and what you need to be looking for when shopping for secured credit cards and understanding what place they have in your credit profile and how to use them. We're going to talk about all of that in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your personal blueprint for prosperity. So one particular video that I watched this morning at the time of this recording had a pretty prominent financial content creator, YouTuber, who had a pretty reasonable sized channel, giving his take on secured credit cards and essentially wrapping the video around advocating for one particular secured credit card. I'm not going to even say which card it was because I really don't even want to segue into who that content creator was. We're just going to focus on what his perspective was on secured credit cards and why those perspectives may be a bit flawed and misinforming some of you who may run across this type of content. And we're going to dive into secured credit cards and how you need to shop for them and how you need to use them. So his criticisms were mostly around the fact that secured credit cards, in many cases, by his verbiage, do not unsecure and graduate. That is not true. He was given his perspective on secured credit cards from a big bank or most notable size banks and institutions perspective. And even from that perspective, it's not true. The one card that he was promoting was the Discover It card. And yes, it's a good secured credit card. It does unsecure. It has reasonable limits over time, but it's not the only one that does so. There are thousands of financial institutions in the United States, and many of them offer secured credit cards. Thus, many of them offer secured credit cards that graduate. His next criticisms were that the secured credit cards by default have lower limits because they are secured by your cash initially, and many people only put on average between $250 and maybe $1,000 in these different credit accounts. And you have the option to put more, but many people won't tie up much more cash in that scenario. His criticism around having the low limits is that you're going to be compressed on your credit profile when you go to apply for unsecured credit cards. Sure, lenders look at your credit profile and like to match limits. That is a fact. Where this is misinforming you is that those limits being low are being compensated by timing. Because what this means is you're literally able to buy credit when it comes to secure credit cards. And this isn't something that's getting enough recognition when it comes to secure credit cards and secure loans. If you were to call yourself waiting to just, find some other form of financing to build up your finances, that didn't require you to secure your own cash against it. So maybe you tried to do alternative credit reporting, metrics, like having streaming services reported or rent reported, things of this nature. It's going to take you a significant amount of time to build up a credit profile that's going to get you access to high limit credit cards, because these are not correlated lending products or credit reporting trade lines. These are not correlating, okay? You have alternative data sources, which are fine to add to your credit report, but it doesn't tell a credit card lender that you know how to use a credit card because you're paying for your streaming services every month. Does that make sense so far? So his criticisms around the fact that, unsecured credit cards are going to give you lower limits, and thus you're going to get lower limits when you get unsecured credit cards. Sure, that's true initially, but the reality of it is by the time you get that unsecured credit card with its initial limit, within 3 to 6 months of proper use on that card and maintaining your credit profile, if your income qualifies you, which is the case regardless, you can get a higher limit on the card. And you've probably gotten to that unsecured credit card status significantly faster because you turned your cash into credit instead of waiting around for other alternative data sources or whatever you might be trying to use to build your credit to come along and boost you up high enough. His next criticism was that the lenders that offer these secure credit cards, which he was referring specifically to subprime credit lenders, right? So an example of this might be like Open Sky and a few other Merit Bank, some of these other institutions that are known for subprime credit, unsecured credit cards, and that other lenders pulling your report in the future for unsecured credit cards and other lending products are going to see them and be turned off by them. Sure, to whatever degree, if that's all that's on your credit profile, then no, you will not be trusted with immediate high limits on your credit profile if you only have subprime lenders and secure credit products on your credit profile. Again, what's missed in this scenario is that you don't have to go to these institutions exclusively. If you want to get a quality secured credit card from a quality financial institution, you can just probably go around a corner from wherever you live. You don't have to go online on Credit Karma or some other random, website that will, promote these affiliate partners basically to you, like an Open Sky or Merit Bank or other financial institutions or lending companies that offer these secure credit cards. Many of you that watch my content or go through my content will learn I am a relationship banker. I am a banker by trade, and I am a huge advocate of relationship banking, meaning that I encourage you to go to your local credit unions and local and regional smaller mid-sized banks in your area and build a relationship. When you're looking for secure credit cards, these are the institutions that you should be going to. They're physically located right there. You don't have to trust some online lender or deal with them and have that on your credit report, limiting your financial reputation. Does that make sense so far? So what you want to do with secure credit cards is understand that they are a tool to leverage you into unsecured products and other graduated lending products faster by turning your cash, your excess cash, into credit, responsibly using that credit, and then leveling up to the next level, which is going to be unsecured credit cards and any other lending products that you may have interest in on your financial journey. So you want to ask these lenders, when you go to these financial institutions, I recommend credit unions or banks in your area, it's okay to use online lenders in this scenario. But again, it's not necessary. You can literally go down the street, literally probably within 5 or 10 minutes of where you live and find a quality financial institution who offers secure credit cards. You simply want to go to them, ask them if the product unsecures, meaning that the money you're putting down to acquire that credit product is going to come back to you at some point in time without having to close that line out. Ask them if it graduates to an unsecured credit card. It's not a deal breaker if it doesn't. Just go apply for an unsecured credit card and move on to another institution, or use an unsecured credit card at that same financial institution. That's even better in a lot of cases because they have internal data points on you now and don't have to just rely on your credit report. You want to check and see if it has an annual fee, what other fees it may have associated with it. Check and see if it has purchase protections and any other benefits. And some of these secure credit cards actually earn rewards points. They're good financial products. If you're new to credit or rebuilding credit, it is an immediate way for you to walk in with some cash and walk out by the time you get that card with credit without having to get a hard inquiry in many cases, and possibly getting your money back. And if you don't, it's just an investment in your credit. It will pay itself off many times over. It's not a big deal. The next thing is if it graduates or not. Again, if it graduates, wonderful. If it doesn't, who cares? You're now qualified for other high quality financial products and lending products. So I wanted to address this because if you can't tell, I was a little frustrated to run across a prominent financial content creator or YouTuber who's basically most likely promoting a particular credit card that he had an affiliate link to, likely the way his video was structured. And this is why it's important to pay attention to who you're paying attention to. Because myself on this channel, being a financial professional, a banker by trade, your entire financial profile is what's important to me, not a specific product. So I'm never going to structure my videos around a specific product, dissing every other financial product to try to funnel you into a link in my description. It's not going to happen. I'm here to help you level up your wealth, even if it doesn't directly put money in my pocket. I'm here to bring education and I'm here to bring value. Find a local institution in your area, build a relationship with them by opening a checking and a savings account, put whatever the minimum amount or whatever excess capital you have into a secure credit card with them. Before you agree to that product, ask them if it graduates, ask them if you get your money back, ask them if they're going to do a hard pull, ask them if there's any purchase protections, points, rewards, or other benefits, and then acquire that card, use it effectively, keep your low limits under 30%, ideally under 10%, pay it on time every single month, at least the bare minimum. I recommend paying in full so you do not pay interest. Ask for credit limit increases and move on to the next financial product. Move on to the next unsecured product once your credit has started to increase and get up to a healthier level. Simple, nothing complicated. There's nothing wrong with secure credit cards. They're a very smart financial move depending on the financial position that you're in. Be careful who you're paying attention to. This is JP from Blueprint for Prosperity. I'm checking out. Thank y'all for tuning in. I enjoy bringing you this content. As always, I want y'all to stay focused, stay in motion. I'll see y'all soon.